Hello, everyone. Leigh here from Martinuzzi Property Group with my weekly real estate market update. I do hope you're having a fantastic week. More wet weather ahead of us this weekend by the looks of things. So hope you keep dry, guys, and keep safe as well. This week in the property news, guys, property prices, still falling, but slightly and easing as well. So they're looking like the market might be finding the bottom as well. We have seen price drops in the likes of Sydney and Melbourne much higher than the rest of the country. But usually that's the case. Where you see the greatest gains in the booming market, you also see the greatest drops in a declining market as well. So Sydney has reported about a 7.8% decline over the past 12 months, and Melbourne about 4.8% decline over the last 12 months. Brisbane still in the positive territory, just up 11% year on year. And Sunshine Coast is nearing that average as well. Anything from 6 to 11% still in the positive territory here on the Sunshine Coast. I have read reports that in the last few months we have seen declines of about 4.5 to 5.5%. However, what I think it is, as I discussed last week, is that the inflated market from the extreme competition that we had last year isn't there anymore. So prices are just finding their normal level once again as well. So some properties are sitting there for longer. There's still a lot of active buyers out there and buyers that are willing to spend good money for properties that represent really good value. We've had a number of great sales in the area in the last couple of weeks, which is fantastic for our clients there as well. Some have taken a little bit to get that right buyer. Others have moved very quickly, still in a market that seems to be slowing. In the property news this week, making headlines, the Cordell Construction Cost Index has reported that they've seen record increases in the costs of construction. So in the residential game, they have seen price costs jump by 11% year on year. So what I expect that will do is force a lot of those buyers that were looking to perhaps buy land and build, move towards established homes for their affordability as well. I've also got a couple of charts in the blog this week, guys, really interesting charts about where our buyer trends will happen next year, where our buyers will come from. For one, we will see less first-home buyers as interest rates still continue to climb, and affordability is out of reach for a lot of people. So we'll see first-home buyers probably exit the market by a little bit, and we may see investor buyers increase a little bit next year as well. As prices drop slightly, the rental returns then become better. So that might attract a little bit more investor activities moving into 2023 as well. They've also got an interesting chart there that was provided by Matusik. He does a weekly market report as well. Interesting chart about what's considered important when buying a home and what the trends will look like over the next couple of years as well. Interestingly, they're saying that work from home spaces will be less important. Buying in regional areas will be less important as well. So that'll be interesting to see how that plays out for us here on the Sunshine Coast. I'm very positive that we're going to have a lot more people still looking to move to our beautiful area here on the Sunshine Coast. So that's it from me, guys, this week. If you are interested in more real estate news, jump on to martinuzzi.com. We can show you all the blogs and insights there of what's going on in the property market. And this week, if you are subscribed to my newsletter, I'm sending out suburb reports for all the suburbs in our local areas and the surrounds to show you what's going on in your area as well. So make sure you subscribe to that by heading to our website below at martinuzzi.com. Hope you have a fantastic week, guys. Anything we can help you with, give me a call. MPG with you all the way. Talk soon.